The US dollar is screaming higher, DXY hitting 109. So, who better to talk about the US dollar with than Mr. Brent Johnson himself? Brent, we've got the dollar not just screaming higher, but it's starting to cause a lot of problems around the rest of the world. What is your take on what's going on with DX, not just DXY? We don't really care about DXY, do we? It's more about the dollar itself. What's going on with the dollar here?
Well, as we've said many times and tried to get the point across, is that it's a relative world. And even though the U.S. has started cutting rates over the last 4 months, so is the rest of the world. And, part of the reason the dollar fell, first, call it 8 to 9 months of the year, was the anticipation of that we were going to get these 7 rate cuts this year, right? And the 7 rate cuts, kind of went by the wayside, but we did start to get them. But markets move on anticipation, and the dollar fell in anticipation of those rate cuts. And when they finally cut rates, the DXY was around 100, I don't know, 101, 100, somewhere there. And I had so many people tell me now it's really going to fall. It's going to go to 95, 90, 85 because now the rate cuts are coming. Well, I think it was within 2 or 3 days of that first rate cut that the dollar, I don't even think it went below 100. Maybe it touched 100 for a second. Maybe it touched 99, 99 or something. But since then, it's pretty much been a straight line. Well, actually, it's been very steady, right?
Until
it's
more recently,
very steady until very recently. And what I think is interesting is over that same time period, you started to see problems bubble up around the world. China started to ease massively because they just could not ease anymore, right? They finally had to do the stimulus because of the massive deflationary forces within their economy.
I mean, that's the thing, though, right, Brent? Because we've seen over the last, certainly the last couple of days, but even before that, we're going back, to middle of December. Suddenly, the dollar everybody's talking about the dollar because, there's the expectation the dollar was going to go down, especially rate cuts and everything else. And then the dollar goes in the other direction. It had that spike up in November around the election. People trying, was that Trump? Was that the Fed? Was that something else? And then it kind of went quiet. And then just the last week or so, everybody's talking about the dollar. And you're starting to see, as you were saying, it's looking like things are beginning to really break here, where it's putting pressure on not just China, but all of these places around the world.
Yeah, I mean, look at Syria fell, right?
Yeah.
China's got these problems. Korea. I mean, they
Yeah.
they announced martial law in Korea. Now, I'm not saying the dollar going higher is the primary cause of this, but as the dollar goes higher, it puts pressure on global economies. And as pressure ratchets up, the leadership, the business leaders, the political leaders, they all come under pressure. And when things get under pressure, people don't make the best decisions. The decisions they have to make aren't as easy. And so then that's where you start to get the volatility to rise a little bit. And I kind of feel we're at a point now on the dollar that everything's just kind of simmering, and everybody, it's like the pot, right? And it's bubbling and bubbling. And if the dollar doesn't turn lower soon, then the lid's going to blow off the pot.
I think that's the way I look at it, is that, we have all these places that have enormous problems to begin with. And then the dollar comes along and it's just one thing too many. So you have Korea, as you mentioned, Syria, and there's a bunch of other ones. Brazil's another one. We're down here in Colombia at rebel capitalist headquarters, George Gammon's place. And, Brazil's real has just utterly crashed, causing all sorts of financial chaos. It's not that the dollar caused it, but the dollar was like a pressure cooker, turning up the pressure so much that it leads to all of these other negative consequences that they don't just show up, but it seems like they just show up if you're not really paying attention to what's going on.
Yeah, even Russia, Russia's currency has fallen dramatically. And I think I read the other day, and somebody can check me on this, but I'm pretty sure Russia had the highest inflation in the world for the year of 2024. So they're struggling as well. Now, this also comes back to the U.S. And my primary issue with this whole topic is that people automatically just talk about all the bad things in the U.S. And I don't want to sit here and say that the U.S. doesn't have problems. And I'm not going to sit here and say that the pot's not starting to bubble in the U.S. either. Yeah. I think that's absolutely the case. But I don't think it is the primary one that everybody should be worried about. And I'm actually much more worried about things going wrong overseas than I am about them going wrong in the U.S.
It always seems to be the case, right? You ever see the dollar go up? It's not like the U.S. is completely clean and free. But when the dollar does go up, it makes all the situations outside the rest of the world, or outside the United States, around the rest of the world, like I said, they get the pressure turned way up on them. And you notice what's happening over there more than you do, say, here. Perfect example. We were talking before we started recording here, before we went live, about China. I mean, China's an utter mess, but they've been able to hold on and have everything hang together for quite a long period of time. But over the last several months, you get the feeling that something has turned over there. I just did a video a couple of days ago, or was it yesterday, talking about something big changed in the dollar as well as Chinese markets at the end of November. And so we're sitting here at the start of 2025 with the dollar going higher, really shining a spotlight on all of these places. It's like the dollar has this ability to shine a spotlight on whatever's weakest in the system. That's right where it's going to go when it's in these situations. It's going to go look at the weakest parts of the system and just shine that spotlight right on them. And right now it's on the BRICS. It's India, it's China, it's Russia, and Brazil.
Yeah, no, I'll give people a good example here. Is, as Jeff said a little bit ago, we're down at George Gammon's place in Medellin, and he's having a conference here with, look who it is.
Decided to stop by.
There he is right there. And there's people from all over that are here. And I was talking to one of the participants is from Australia, and he is in commercial real estate. And his job is not to build the buildings, but it's his job to go in and design the office space inside the building. And part of the reason he said that real estate has held up, even though it's getting shaky now, even though it's held up in Australia, is there was always a future catalyst. And over the last,
there's always some support, right? Something would come along.
And for the last 3 or 4 years, the support was China and the bridge and road, right? And the fact that in Australia's kind of doubly exposed to it because they sell commodities into China for manufacturing, but then also some of the business needs come back out of China into Australia. And so that has been a source of demand for these apartments, or I'm sorry, this commercial space. But he's saying now that they're seeing that go away. And he said, when they buy office equipment to put into the offices, because they build these on spec, they build them on spec. So they build it out, they buy the furniture, they put the furnishings in. And when he buys a desk or a chair from China, what do you think he pays for that in? It's not yuan. They do not, even the Chinese companies selling him the furniture don't want yuan. They want to get paid in dollars. Those invoices are in dollars, not Australian dollars, US dollars. And so he says he sees it every day. And he said, this is another thing. This is a real world example of something that I've talked about many times. I've said, if you're an overseas investor and you're not a dollar-based investor and you buy US T-bills and you get 4% buying US T-bills, but then your currency falls 4, 5, 6% versus the dollar, you're up 10%. And he told me that's exactly what he's doing. You look at what the Australian dollar's done over the last 12 months, but he's sitting in T-bills collecting his 4%. So he's actually up in local terms, he's up double digits. And so it's just another way of explaining the power of the dollar. And it doesn't mean that the dollar is a good currency. It's just better than all the others.
Oh, it's more useful. Like you say, that if even Australian companies are paying Chinese firms in US dollars, there's always going to be a use for it. And therefore there's always going to, it's like the support for the entire system. And because it's the support for the entire system, it doesn't matter how bad you don't like the US or you don't like the US government, you don't like its policies. It's completely divorced from all that. That's what a reserve currency is supposed to do.
Yeah, and that the reason that people want dollars is because they know that other people want dollars, right? And it creates this massive network effect. And it's not that can't change someday. And in fact, it probably
we're both hoping it does.
Yeah, it probably will. Yeah, that's the funny thing. I think
we're not saying we love the dollar. We're saying the dollar is what it is.
Yeah, we don't. The system has many inefficiencies.
No,
exactly. And the dollar causes many problems. So we're not really advocates for the system.
Not at all. I hate the term dollar bull.
Right.
No, it's nothing bullish about it.
Right. It's just, but it is what it is, right?
Yeah.
And so unfortunately, you got to invest in the world that you have, not the one that you want. The other thing that I think is kind of interesting is I do think a big part of the move over the last, call it 6 weeks or 8 weeks is Trump. And the realization that these Trump policies, even though he has in the past spoke of wanting a weaker dollar, and it's not that he might not want a weaker dollar in the future, it's just that a weaker dollar doesn't necessarily jive with some of his policies, right? He wants to put tariffs on. Well, if you put tariffs on, and the other thing I'm going to say before I forget is that people hear the word tariff and they just lose their mind. Because they've kind of been taught to lose their mind because tariffs are just bad, just automatically bad. And I'm not saying that they're necessarily good, but I don't think you can just automatically assume that they're bad and then only bad for the United States and not bad for the rest of the world as well. But if Trump is going to put tariffs on, it ultimately means that people sending goods to the United States are not going to get as many dollars back in return. Even if they're passing some of those costs on to the American consumer, they are not going to be receiving as many dollars back. And so therefore, there's not going to be as many dollars floating around in the Eurodollar market. And if that happens, then you start to get a supply constraint. But all that demand still exists, right? And all that debt still needs to be services. All those invoices still need to be paid. And that ends up pushing prices higher or price higher on the dollar. So in some ways, even if the Fed comes out and continues to cut rates,
which they're going to do,
the tariffs in many ways offset them. And so, or have the potential at least to offset them, and so maybe Trump will come out and say, listen, we're going to have these tariffs go into effect, but they're going to go into effect 12 months from now, 18 months from now, 24 months from now. So get your house in order because tariffs are coming. And if they do that and they push the tariffs down the road and they start to cut aggressively and the rest of the world doesn't cut aggressively and growth continues to hold up, then sure, can the dollar go back to 105 or 100? Of course it can. But the system does not.
The probability of that, though,
but the
probability is not good.
And if it goes the other way, again, we're kind of at the point where if it goes, heaven help the world if it goes the other way, right?
We don't want DXY at 120.
That's when things really start to break.
I think what was interesting for me, and I pointed this out in yesterday's video, was that looking at the tariff angle, what you didn't see was a sharp decline in either the peso or the Canadian loonie. The Canadian dollar didn't go down. Now, those both have been weak, and they have been weak for months. It's really only the emerging markets and China. So China, the yuan, Brazil, and India's rupee, Korea's won. So basically Asia, that part of the world, where you see the sharp spike in the U.S. dollar against those currencies. So that's why I get back to this. It's not necessarily about tariffs, except if maybe that tariffs are the straw that breaks the camel's back for those countries. And how we're talking about Australia, all of those countries that are upstream or downstream, depending on your perspective, of China. So what I think the dollar is doing is highlighting for you, these are the weakest places, the weakest spots in the world. It's China, it's Brazil, it's the Indian emerging markets. Not that we don't have anything to worry about in Canada and Mexico, because Mexico is starting to turn. Canada's already cutting rates aggressively because their economy is getting to be rough shape, especially with the unemployment rate. But the bigger financial risks, let's talk about financial risks rather than economic risks, seem to be focused in those places. And those places have in common either banking irregularities or credit bubbles, especially places like India, China or Brazil to an extent as well. So maybe the dollar is less about the economic differentials, and maybe it's more about, okay, if there are tariffs, what's that going to do to these weak financial systems?
Well, not only that, but then you start to get into these kind of derivative effects or second or third order effects, right? And we wrote a paper back in, I think it was either May or June, about the interconnectedness of the global real estate markets and how China, for several years now, you could even argue a couple decades, their growth has been the global driver for global real estate prices. And I think
and a whole lot more besides
that. And a whole lot more besides that.
That's just where it starts.
But one of the things that we showed was that the price rises in both Australia and Canada were largely a result of not only the growth economically in China, but then the wealth created in China that then left China and was invested in Canadian real estate and Australian real estate. And, China's currently having their, come to Jesus moment with capital markets. And, they've been fighting it, but, they're kind of at the point where the PBOC and the CCP is not going to be able to play nice anymore. And if they start to, demand capital return, Chinese investors return capital back to China.
Well, it might even be the government. I mean,
Yeah, no,
there
absolutely.
could be liquidity pressures
Sure.
in China
No, no.
alone that
There
have forced
absolutely
repatriation.
No, exactly. And so then that liquidity leaves Australian housing prices or real estate prices, and it leaves Canadian real estate prices. And now all of a sudden, you've got a liquidity event kind of all over the place.
Yeah, it starts out in China, and it looks like a Chinese problem with Chinese real estate. But as you're saying, interconnectivity means that there is no China problem. There actually is a much more global problem. That's, again, the dollar is shining a spotlight on the weaker areas. So the areas that are most exposed, or what's the term the kids use? China adjacent. So whatever's most China adjacent, the dollar is saying, don't like you whatsoever. So you've seen Brazil real crash this month, Indian rupee record lows, Korea's won not just China adjacent, but domestic Korea has become. And that's really where the focus is. But to your point earlier, Brent, right, that got a clap of thunder there.
That's good timing.
Yeah, that's the dollar speaking, right? It's a dollar. That doesn't mean that it's only about China. It's only about Brazil, or it's only about India. That's just where those places are the weakest and the problems are most visible. We still have to look at Canada. You still have to worry about Mexico, and you still have to worry about the U.S.
Absolutely.
Because if the U.S. economy does buckle, the labor market continues to get weak, and the unemployment problem continues to grow, that just adds more downstream pressures on top of everything that's going on with China. And I think that's part of what the dollar is pricing here too, is that, okay, we're starting with emerging markets, but that's not where it's going to end. We're going to focus on everything else. There really is not any good place when you look around. What is good? What is going really well right now? And I think that's where the dollar goes higher. Is that, okay? We've got all these problems, and there's not a whole lot to balance it out on the other side of the ledger.
That's right. And so this kind of goes back to a concept that I've talked about many times, and I think this is a good time to kind of reiterate it, because I think it's crucial to understand this. Again, it's not that there's not problems in the U.S., but based on the system of credit that dominates the world, the problems start on the periphery and they collapse back to the core. You're not going to have a collapse in the core that then exudes to the periphery. And that's what you're seeing. You're seeing the periphery economies that are most affected. Like you said, the dollar is shining a light on them. And so it's not that these problems won't, eventually, domino back to hit the U.S. And it's not that the U.S. is in perfect shape right now. It's just that kind of by the design of the system, the periphery economies get hit first. And some people
it's almost like a risk hierarchy.
No,
right?
absolutely. Absolutely.
Yeah. Anything that's more perceived as more risk. That's just fundamental common sense, right? Yeah. If you're a portfolio manager or a business person, if things are looking bad across the board, you take your money off the table where it's at most risk.
That's right. And so, the other thing that I think is important to touch on here, and I'd love to get you to get your take on this. I'll give you mine, and I'd love to hear your take on it. Is I get the argument a lot that, well, Brent, yes, the dollar is getting stronger, but it's still a fiat currency, and it's still losing value versus gold, and it's still losing value versus Bitcoin, and it's losing value versus stocks, and inflation is still high. And when I go to the grocery store, my bill costs more than it did the month before or the year before. And as a result, does it really matter? Does fiat versus fiat really matter? Or most people will say it doesn't matter. And, so you should just get out of all fiat currency. Well, here's the thing. It does matter. In fact, every financial crisis of the last 40 years, in its initial stages and oftentimes in its middle stages and even the end stages, has some element of a carry trade gone wrong in it. It's because too many people borrowed in a currency or too much leverage on in a currency that they couldn't print or that they didn't have control over. And when their currency fell versus that other currency, all hell breaks loose. And the entire system, the entire global monetary system is really one large carry trade on the US dollar. The whole world has borrowed dollars.
It's all pyramided off of the US
dollar. It's all
dollar.
pyramided off
Even
the
that
US
includes
dollar.
even central banks.
Even central banks.
Central bank balance sheets, by and large, have tons of dollar assets on them. So their local currencies are dollarized themselves.
And so the idea is when the dollar rises versus other currencies, it collapses those other currencies and those other economies. Now, it doesn't have to mean that it ends up in a total pile of rubble with smoke and ash coming out, but it hurts and it causes pain. And if you think that just that the whole world can just buy gold or buy Bitcoin and it solves all their economic problems. It just doesn't work that way. I mean, carry trade blowups and global credit contractions cause problems for local economies. They cause problems for state economies, national economies, and regional networks. And so there's really no place safe if we get into a pyramiding or a pyramiding credit contraction, because markets are so interconnected now, much more so than they were 40 or 50 years ago. And I think we're actually in the process of going from a world that became very globalized, and we're now in the early stages of the process where it becomes less globalized and more centralized regionally. And that's part of the issues. That's why problems are bubbling up, and that's why things are starting to break.
Yeah, to me, it's not necessarily we're at a risk of a complete global wipeout and collapse. What we're seeing is all of these cracks in the system that are related to basically what you just said, Brent, which is a paradigm shift.
Yeah.
We went through a period where we went decades where globalization worked and worked really well. I mean, we had a period of, I keep saying this all the time, unparalleled, undreamed of global prosperity. But like anything else in human nature, it was always bound to be tempered. There was always an expiration limit on it. And so 2007, the thing starts to break down, but it doesn't break down all at once. That's a prolonged process as well. And it's taken several stages. There was a big stage in 2012. The developed world, the U.S. and the United States, had big problems right after after the global, not financial crisis. But then it eventually affected the emerging markets in China and everywhere else, but not all at once and not in a continuous straight line. It's a discontinuous process. So we keep seeing these intermittent crisis periods. What they're really saying is that the system is trying to adjust in this phase transition. And if you're used to longer term cycles and shorter term cycles, we have several different cycles at play at the same time. And we may be in a position where some of these longer term cycles in the monetary system are syncing up with some of the shorter term ones, such as the 2020s coming down from the supply shock high. We're still coming down from that high. At the same time, you have the longer term issues with deglobalization as a symptom of de-dollarization. And by de-dollarization, I don't mean bricks replacing the dollar. I mean, the dollar system doesn't work in the way that it used to. Yeah. And so you have all of these things starting to coalesce in a single, not necessarily a single process, but you're starting to see more visible signs of them. It's not necessarily the world is going to end. It's that there has to be a transformation and a phase shift.
Yeah.
And so the dollar going higher from here I think it's another symptom of that phase shift. And the thing about phase shifts is they usually are messy and not really that fun to go through, which is why you have all of these financial risks and everything else. So I think that's where the dollar going higher here, less about interest rates, more about, okay, we still have this process to go through.
Yeah. And so oftentimes when I talk about this, I get the comment, well, reserve currencies don't last forever.
And they don't.
Of course.
Stipulated.
Right.
Stipulated.
And, you think the dollar is going to stay the global reserve currency forever? No, I don't.
Nope.
No, I don't. It's just, I don't think that we can transition from the current system to whatever new system comes next without pain. And
that's assuming we even had a currency system that was available to do it.
Right,
there would still be a messy transition.
There would still be a message. Even under the best circumstances, it would be messy. And when the world gets messy, the dollar goes higher. So that's the only point. The point is not that the dollar is a great currency.
That's a good way to sum this up.
The point is that a transition is messy, and during messy times, the dollar goes higher. And when the dollar goes higher, it creates a vicious loop, which makes things even more painful than they otherwise need to be.
Yeah, let's end it. I think that's a really good way to end it, is that the dollar goes up, it gets messy. Now, how messy it gets, that's what we need to pay attention to over the next little while to see what the dollar does, but also all the other indications that we follow. And I have to thank Brent for joining me here today. Thanks, George, for hosting us here. Thanks, everybody, for tuning in.